Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Thursday, the 1st of July. Starting off with the Mccanga, where we've had another bounce off the floor of this broadening triangle, which has been in place since October. Broadening triangle is normally good news, obviously, as the resistance line goes higher and higher relative to the share price. And an end-of-day close above the 50-day line today, around 27 pence, should be enough to seal the deal on a potential move towards 40 pence plus as soon as the end of this month. If you're a bit fussy about the shares, I suppose, then you might wait for proper clearance of that line from May. And that's around 28 pence, but really it looks as though the work has been done with this sharp looking candle that we've got in place today. Next up, a stock which is also perhaps ready to push off the ground here. We've got a falling wedge after that horrible pullback from around 9 pence down to around 3.5 pence over recent weeks. Double bottom here around the 3.5 pence level. Above that, we're looking for potentially retesting 5 pence initially, breaking that resistance line there from March, and then after that, obviously back up to the 6 to 6.5 pence zone. Maybe that could be seen by the end of this month. Good news today from Iron Ridge, very impressive news in fact. Perhaps the share price not doing as much as one might have hoped for, but nevertheless we've had a gap gap above the 50-day moving average. We've broken that resistance line there from back in January. That was around the 21 pence level, and while the shares remain above that, we're looking towards as high as 36 pence at the top of the rising trend channel from October. At this stage, only really back below the floor of the gap there, around 19 pence, really delaying the upside scenario. But gaps through resistance and through monthly resistance as well, normally a sign, or normally are subject to decent follow through to the upside. On to MetalNRG, and here we've got a situation where the shares have, if I can type out the right ticker code, the shares have managed to bounce after a sort of a bear trap there below 0.5 pence. View here is that 0.5 pence looks to be the support for the shares after this slight overshoot, and above that level looking for a return towards the upper 60s, let's call it, nearly maybe 0.7 pence over the next couple of weeks. Best case scenario perhaps by the end of this month up to 0.8, which was May resistance for the shares. But just looks as though a bit of bullish divergence in there and an overshoot on the downside could mean that MetalNRG is back on a more stable standing, let's say. Moving on to 88 Energy, which had a great RNS in the sense that it's always good to read that a company's paid off its debts. Here we've had the shares anticipating that for a couple of days, or at least a week or so, breaking that line of resistance of 1.3 pence. Above that, we're looking towards 2.1 pence as soon as the end of this month on 88 Energy. Sareum has been one of the heroes of the recent past, doing really well both on a technical and fundamental basis. Nice gap to the upside that we've seen today. I'm not sure where that line came from. Rising trend channel from the beginning of April, and while we're above the floor of the channel, around 5.8 pence, looking for a retest of last month's resistance up there around the 9.5 pence level. That could be seen as soon as the end of next month, i.e. by the end of August, but everything hinges on the shares holding 5.8 pence support. On to Carclo, which probably normally wouldn't make the grade here, but because we're a bit thin on the ground, we've got this rising trend channel to look at. That's heading up towards 90 pence, which is perhaps a 2 to 3 month target. Key here is that we break a line of resistance from May at 60 pence on a weekly close basis, hopefully, so maybe this week or next week. We've got a good rising 50-day line, so that is positive, and multiple support points at 50 pence. So we should be on our way for aggressive traders, but breaking 60p to get 90 pence on a couple of months view is the story currently at Carclo. Update from Cambridge Cognition today is spin-off news, I believe, from memory, and shares already anticipated good news with the gap through resistance. We held the gap earlier in the week, and really, I think, as I said before, above the 151p level, looking for further upside for the shares. Could be as high as £2.80 over the next couple of months for the stock, which is the top of a rising 2020 price channel. So let's see how we go. Ideally, there's no end of day close back below the former June peak there at £1.69. So that would be really handy if Cambridge Cognition did that. Stock which doesn't get much airplay, Shearwater, but is here today, is a special treat. This is on the basis that the shares gap through resistance back in April, and actually held that gap and held the previous peak there around £1.47. Higher highs for the share since then as well. It looks as though we might see Shearwater actually close above the rising 50-day line at £1.76 today or tomorrow on a weekly close basis. If we can get that, then we're looking for a retest of the best levels of the year to date, around £2.20 plus, hopefully by the end of next month, so by the end of August, if we're really lucky, but by the end of July. But let's go for August, and the upside valid while we hold above that last swing low there at 165. Moving along to just 3 stocks to go. One of the stars of the moment has been and remains Codal, managing to see off the profit takers even at the higher levels here. Rising trend channel for the shares has been in place since March, and we're hoping still for 0.7 pence, hopefully as soon as the end of next month, and that's valid while we hold above recent support, while there's no end of day close back below 0.4 pence really. 0.7 could be seen by the end of August, or perhaps even sooner. The end of the lockdown, hopefully definitively on July the 19th, will mean that we can hang out in bars and try and give COVID to each other, but we have a good setup here with Revolution bars in the sense that we had a gap down, we had an island reversal there, island top in May, and now we've actually got an island bottom, which looks as though hopefully will hold around the the floor of the gap at 21 pence. Above that, and certainly above 20 pence, looking for a recovery, if only back towards trying to fill half the gap and the 50-day moving average up there near to 27 pence. But like to see the shares above 27 pence before assuming that they are finally out of the woods after what's obviously been a rather torrid year and a half. Finishing off with one of the best performers on Aquis, which has been Valyrian Blockchain. Good progress for the shares within a broadening triangle, which has been basically in place since its Upper Thames days. We saw resistance there in April around 45 pence. We then had another peak there around 80 pence. And you can see that the line of resistance, the shares have actually been quite obedient to that line of resistance. That line of resistance now heading up towards 95 pence. So while we're above recent support at 40, that is where we would suggest that the shares will head up to. Above 95 pence, though, we've got a fresh target there, with that steeper resistance line from February as high as £1.20. But 95 pence perhaps by the end of this month, and that would be certainly valid while we hold above 50, because we've had 50 pence support today. But the overall pattern is above the 50-day line at 40 pence up to 95 on a 1-month view for Valyrian Blockchain. That's it from me today. More updates tomorrow.